Hey everyone, welcome to the stream. It's Miriam and I'm back again with another amazing founder. Today, Basia is going to be talking about fundraising and getting VC money dollars. So I'm very excited to have her share as she's recently completed a very successful round. Welcome, good morning, how are you?
Hi, good morning. I'm doing well. Thank you so much for the invite, and I'm looking forward for this interview.
No, thank you. I appreciate you taking the time so that I can learn from your experience as I've never raised money before and looking to do that. So thanks for sharing your knowledge with us. Why don't we start off with just kind of a brief intro? I'm sure that people are able to read your bio, but it's always nice to hear from the founder how they feel like they got to the point where they are in their journey.
Oh, sure. So my name is Basia, and I'm a CEO of SliceUp, and we deliver an automated ETL and log data wrangling for data engineers to make them more productive and reduce their time that they need to build log data pipelines and basically prepare this data for further analysis. Very technical product. Recently closed a pre-seed round, which was a total of $500,000. From angels, both angels and institutional investors. And currently, I live in Boston, where I moved. It's probably 2 years ago now, after our company got selected to Techstars Accelerator. And prior to SliceUp, I founded a company in Poland, where I'm originally from, and that was a real estate company. So, fun fact, it was international real estate agency that was covered multiple times on HGTV. So if you happen to see me on House Hunters Internationals, don't be surprised. And so I was doing that for over 6 years. And actually, what is interesting, what I found, there's so many similarities I found that selling houses made me a very good fundraiser. As weird as it sounds, building a strategy around selling a house and creating an open house, and how you generate the FOMO and how you make people actually get excited about the house is really similar to selling your company to investors, which is a fun and interesting fact. And we can cover it later during the interview. And after hours, I'm trying to find my balance on the trapeze at the circus school, and also practicing my mindfulness while racing cars.
Nice. Those are very exciting hobbies, and how interesting. I see Sat has joined us in the stream. He's saying good morning. Hello, what's up?
Good morning.
Yeah, really excited to have Basia here. Sat is in a round right now, and I believe has also is interested in doing an accelerator. So I'll let him share in the comments if he wants to. But any questions you have for Basia, just chime them in. We'll make sure that she answers them. She's kind enough to spend the morning with us diving into all of this. So what you kind of went into SliceUp, what it does at a high level, so people can check that out in further detail on the website, or if they have questions to chime them in. But what would you say a founder needs to start their fundraising journey?
Great question. So depending on where you are in your fundraising process, and if it's a pre-seed, seed, or Series A, that will probably differ slightly. But one thing that it's always in common, I believe, is a good story. So what you need is a solid story that you know how to tell in a compelling way. The story that basically tells the investors why now and why you are the one to make them more money, basically. How are you turning their money into the next unicorn, right? So that's what you're looking for. Now, you also have to keep in mind that the story may be slightly different. Like maybe not the story will be slightly different, but the how angels and how VCs look at investing into companies is slightly different, which means that basically for angels, They look for companies that will exit soon, and they'll make them like 10x return. For VCs, it's they're looking for the next unicorn, right? So they will have a slightly different expectation of the company as you go. Simply because their incentives are slightly different. They invest their personal money versus VCs that need to make a return for their investors, right? So the returns must be much higher. So that's something to consider. And other than that, what you actually really need is just mental readiness for the fundraise, which basically means that be ready for having plenty of phone calls, having plenty of meetings, and basically building the strategy, which is super important, because as it turns out, you cannot wing it. I've tried to wing fundraising and turns out that it doesn't work. And you end up super frustrated in the end, and it's just taking way too long time. And if you come prepared in a way that you have a strategy and clear idea on how to execute the whole fundraise, which we can cover also later, this is something that allows you to build this momentum around your company, generate this FOMO, and close this round very fast.
Mm-hmm. Okay, great. I love those points. So let's say I'm not ready, what should I be doing to get ready?
Great question. The best advice I've heard is just work on your business. So what it means is working on your business helps your story. And so if you're super early and you just have an idea, right, go out there and start talking to customers and then get their feedback. Build a simple mock-up. It doesn't have to be, the product doesn't have to be ready yet even, right? Like build a mock-up and go out there and just start asking people for their feedback, ask about their pain points. And basically, if you, at the end of all this exercise, you can go to the investor and say, hey, we've done 100 interviews over 2 or 3 weeks, and this is what we've learned from our users. And they said 80% of them said they will buy if we deliver X. That's a good story for the investor. So again, you don't have to have a product yet. You just need to have a good, solid story why people care about this problem, how much are they going to pay, and how are you going to execute on this. So that's one thing. And the second best thing you can do if you already have a good story, just start building the pipeline of investors. So create a CRM, a list of 150 investors that you would like to speak with, and start reaching out to them and create a story and the deck that supports this story, basically. So here is another interesting point to consider. Very often what you will see is people will create a deck first, and then they try to fit the story into this deck, because there's plenty of templates on what deck should have, right? So if you follow the template, you then need to fit your story into this template and just create the flow. The advice I got, which was really powerful, is try to tell this story naturally, as you would tell it to your friend or whatever. And after you have the story written and you cover the most important points that also investors want to hear, like a market size, like go-to-market strategy and all these type of things, and that actually fits nicely with the story, and the story is compelling and they're like excited to hear it, then only build the deck to support the story. The deck must be only a visual, very simple visual to support the story as you go through it. So try to create that. And the best way to do this is basically line up 20 calls with investors that you probably know they won't invest in you simply because they don't match. What I like to say is try to, like, if you're a pre-seed stage and you know that Series A investors won't invest in you, but they're in your space, they understand this, reach out to them and ask them for advice, because not only they know investors that invest in a seed round, but also you're starting to build relationships for your future rounds. So they start to be there with you throughout the whole journey, and they will help you. Like, you just reach out and ask them, hey, what will convince you to jump on 20-minute call and give me feedback on my pitch and the deck. And they will do that. They'll absolutely do that. There's so many people that will do that for you. So with them, you help crafting the story, and you start spotting, like, you start seeing what resonates with people when you say something, what doesn't. So you have to be very mindful and observant when you do that as well. So one thing is what they say, one thing is how they react to your story. And
okay.
so just do this 20, 30 of these, and like, you'll keep iterating on your deck. And what will happen, at least what happened with me, I got to the point where the deck was good enough to, when I started sending it, people and asking for further feedback and advice, people started saying, hey, I'm actually interested. Can I bring my partner to the interview? And I was like, sure. So this is the moment when I knew I just have to stop working on the deck. This is like not important. I started sending it, like, my friends would tell me, oh, this is crap, I hate this. I was like, well, doesn't matter, it works, right? Like, I mean, who cares at this point? If it tells a good story, if the deck tells a good story, that's interesting, right? Like, if the deck can tell a good story itself, and people get excited, who cares if it's crap or not, right? Like,
yeah. Okay. So at least 150 investors in your CRM. And what did you use for your CRM?
So I use a very simple CRM, which is basically Chrome extension. It's called Streak. And the reason I use it, it's just, again, like, for a growth stage company, it probably won't be the greatest CRM. You will probably have to switch to something else. At this point, it's just basically for a single user, it's free, and basically it's like super simple, and like that's the main point. Like, it's not even the price really, but it's super simple to use. And again, it's a Chrome extension. It works with your Gmail. So the moment you send an email, you can just add these people instantly to your CRM, and it's all connected. You can schedule follow-ups. Super easy to navigate. But if you don't want to play with any software, simple Excel spreadsheet works as well.
Mm-hmm. Okay, great. Yeah, I'm checking this out now. Looks really cool. Let me see if I can share it so people can see as well. Make sure we've got the right thing here. So this is this. So you just install this thing.
Right.
Great. And has a free version. Okay, cool. I love it. And how do you go about finding, like, identifying those good investor matches, like 150 good investors?
Another great question. So how I went about this. So there's obviously top 10 investors you really want to get the money from, because they're really well known in your space, and they provide a lot of value. They've invested in other companies in a similar space, and with the huge exits and stuff. So they can help you along the way, and they can introduce you to plenty of people. They'll have a network within your industry that will help you grow and accelerate your growth a lot. So you want to make sure that you approach this people, right? And other very interesting advice I got from another founder is make sure that the money you take, like the people you take the money from, they can help you with your next fundraise. They're well connected enough with other investors that will be, say, if it's a seed round, Series A investors, that they can keep making these introductions as you grow, and so the next round will be easy for you, basically. Without the support, it's just much harder, and there is no point of just basically suffering if you don't have to.
Yeah. So are you just seeing, like, okay, so this one is a seed stage, so I want to target them, and also I like them because they're connected to this investor who's a Series B or later stage. But how do you know? Are you just looking at LinkedIn connections?
So it's not necessarily that. You'll see that there is like so I would say I just asked during the interview, like, hey, so how well connected are you? Like, can you help me raise the next round? how can you help me? Not can you help me? How can you help me raise the next round, right? And so I also interview them. It's not like it's not one way, right? It's not like they making a favor. Like in the end of the day, you're basically trading your time and your life for also like they're in the business, right? And they're there to make money on you.
Yeah,
it's not a favor. Right. So you're there also, and you want to make sure that you have good partners along the way. It's not. So here's the thing. So when you create the list of 150 investors, right? The way how I went about this, I went to Angel List. I went to Signal. Signal is another similar like a platform that you connect with investors. I went to Crunchbase and then LinkedIn, and then also like this other platform for women, Alpha. There's plenty of other ways you can actually hustle your way through it. My approach was very simple. So on Crunchbase, Signal, and AngelList, you can filter them out, and you can think of it like in many different directions. So one is investors that invest geographically. So if you're based in Boston, look for investors that are in Boston. So if you live there, you probably already have some connections. So you can just start from there, the easiest way.
Mm-hmm.
Then investors that invest in your space or the business model, say dev tools in B2B, right? Or whatever it is. So you just look for all the investors, say within the US, that invest in this type of companies. That also, what is important, each time you must double check what stage of companies do they invest in. So if they say we invest in Series A, occasionally you will see that they invest in seed round company because it was so good. So don't be hesitant to reach out to them, even if you think they might not be the fit. But it may turn out also that, again, at the end of the day, they may be a good resource for the future. But if you're raising a pre-seed, reach out to seed funds, right? So identify angels, identify micro VCs, and basically syndicates, angel syndicates. One of the things I've done, there is an angel syndicate in Boston, and they list all their members on the website, and there is like 130 individual angel investors. I just reached out to every single one of them, and like I was just like a machine, honestly. Just like keep reaching out and just like create a massive list of potential investors, and just
So what are you saying to them when you reach out to them? Like, what does your email say?
So never ask for money, because if you ask for money in this first reach out, it's very obvious you're fundraising, and then the first meeting becomes like the power dynamic shifts, because you're coming there like they hold the cards, right? Like in this meeting, they have all the powers because you are there and you're asking for money. If you ask for advice and the feedback, have some good points, like what advice do you need from them? If you're struggling with your go-to-market, you can ask, hey, can you help me under like think through our go-to-market. I just said, can you help me with my pitch? And even though I knew I already at this point had my pitch nailed because of all this previous conversations we had, it still worked. Like, hey, can you just give me feedback and help me? I'm getting ready. I was like, I'm getting ready to start fundraising, and I wanted to get your feedback on the pitch and my deck.
Mm-hmm.
And this is when they would ask, hey, so can you send me the deck? And I was like, sure. So this is the deck. And they're like, oh, this is interesting. Can I bring more people to the conversation? So that was the simplest way. And I think it always works. It's just like, first of all, you have to remember also that that's their job. They make money investing in companies, right? So if you match their profile, that's their job to talk to you, because they may miss out on the potential next huge opportunity, right?
Yeah.
So don't be afraid. And most of them, they will say yes. And even if this is like 30 or 50% out of all the people you've reached out to, most of them will say yes. Second important thing, don't forget to follow up. So if they didn't respond to your first email or first LinkedIn message, follow up. Always follow up. And at least 3 times. Like my thing is, people are busy, people don't read their mails, and they're like, have thousands of other things to do. Even if they read it, they forgot to answer immediately. I know it myself, right? Like, I'm very bad at this sometimes. And so what I do, like, especially, like, I do it with customers very well, but also with the investors, it's worth doing. I have automated tools to do that for me, because otherwise it's really hard to remember. Right. Especially if you reached out to 200 people and now you have to individually follow up. Until they answer the first time, it's just, again, it can be automated, right? Like, until they get back to you saying yes, we can meet, whatever. You can just automate the whole, like, you can automate your email, you can automate your LinkedIn. So so this way you're making sure that you get as many possible meetings as possible.
Perfect. This is very useful. Thank you so much for continuing to share. If anyone has questions that's watching, just comment. We will pull the questions up and Basia will answer them. We're talking about how to raise funding. She just finished raising a very successful round for SliceUp. And I'm wondering, so you're reaching out, you get the meeting. How many meetings should you expect to have before you're, getting a offer, whatever they call it?
Right. So
a term sheet.
Right. So here's the interesting thing that basically this is the analogy to selling a house. So let me just first very briefly tell you how people sell houses, right? And what's successful and what's not. And then you'll quickly see how it actually relates to fundraising. So what you will see is, at least in Poland, when I was there, it was a buyer's market. So there was more buyers than, there was more offers on the market than the buyers. So they could get picky, right? So when you saw someone listing their fresh, brand new offer, and like they made plenty of time getting it ready, staging the house and everything, and they posted it online, and then they were just sitting there and waiting for people to come. And then like what you'll see is people get interested because the house was good, the price was like reasonable and everything, but then they start like getting picky, and then they don't feel actually the rush to like buy it now, because they know it will sit on the market, right? In their they don't feel like it's going to like disappear. And then like they come to you and they start negotiating. It's like, oh, can we can we get this extra? Can we lower down the price? Can we this? And because you don't have the leverage, you negotiate with them and I just hope that you will close finally, right? So you're not speaking from the strength position. But when you create an open house and you basically what you do, you post the advertisement about the open house, and you say 3 weeks from now we have an open house. People start calling and they're like, oh, can I come and see it earlier? It's like, no, open house is then. Like, but I'm not here around. It's like, well, I'm sorry, no one can see it before. They get panicked, right? Because they really want to see the house and they really want to be there. And basically what you do is you create the FOMO by inviting every person at the same time. So suddenly you have 20, 50 people in the house and they get super excited. And what you also do, which is interesting strategy, you lower, like if the market price is X, you advertise it like below market, like 2, 3, 5% below market. So it appears as something like a unique offer. So that attracts even more people. And then they start bidding and suddenly the price goes up. So that's very interesting. That's the fastest way to sell the house for both the market, right? Especially in the buyer's market when there is more offers. It's different here in Boston because it's a seller's market, really. So the offers go quickly. But if you have to actually strategize on selling the house in the buyer's market, that's the way you do it. And the reason I'm bringing this up is it's exactly the same thing, and the mistakes we've done when we've tried fundraising first. So what we've done before, we didn't have a strategy. So you would just have individual conversations with individual people. And it was like very randomized. It wasn't focused, right? It wasn't happening at the same time. So what we ended up doing, we had a bunch of conversations where people got really excited and they were like, oh, I'll give you 250K. I was like, oh my God, that's great. But then the time has passed. They started thinking, like whatever. And a month later, we ended up with 25K check. Right. So that only shows you that, like you have to create this pressure that they have to make a decision right now and sign this check right now, because otherwise that's what ends up happening. Same with the houses, right? So the way you do it with the fundraising is basically you make sure that you have all the conversations at the same time. I've heard once the expression "keep everyone in the same herd." And so what you do is you won't invite everybody, like to your pitch, but what you do is like they'll ask, how quickly do I have to make a decision? And you just, like you can just throw it out there. It's like, oh, well, I'm not sure, but just to let you know, in the next 2 weeks, I have another 50 conversations already lined up. Right. So that's what you do. And then after these 2 weeks, when you already had these first conversations, the round of first conversations, they usually will ask you for the second. So the moment you start second round of conversations, now you can email everybody and say, hey, how is your process? Like, where are you in your process? FYI, we're starting second round of interviews with, like some of the top VCs, whatever. So they feel the pressure, right? And now, so that's one way of generating this FOMO. And again, for that, you have to have a strategy, because you have to have, again, 150 to 100 names in your pipeline. Reach out to them, make sure that you then whatever 50% of them will say yes to your meeting, whoever says yes, then you have to make sure that all these meetings happen in the same time, or like roughly in the same time, so that you can actually have this, investors also talk between each other, and they will call them like each other. It's like, hey, have you heard of SliceUp? I'm thinking of investing. Yeah, we just spoke with them, or we're speaking with them tomorrow, or whatever, right? Like, so
yeah.
So that's important. So that's something you need to really think through and have this strategy when you go out there and start fundraising.
So are you having all of those meetings in like a month time frame? Like, is it moving through it like a month at a time? I mean,
that depends on how many meetings can you have, but say you can fit 5 to 10 meetings a day, and you can do that because you can work to like West and East Coast.
Right.
So depending how devoted you are to this, right? Like, if you can fit 100 in 2 weeks, you can do that. It's going to be tiring, but again, like, you have to make it a full-time job. That's the reality of it.
Right.
So yeah, you can be more realistic as well and say like 3 weeks for like 100 meetings, but probably 50 to 60 meetings will be enough to find someone who will say yes. Probably, depending, again, like I'm generalizing now, but this is the stats actually from DocSense. They've created this stats, and based on their research, basically on average 50 to 60 meetings get you to the proper seed round.
Mm-hmm. Very, very helpful. Thank you. If anyone has any follow-up questions to anything that Basia just said, just comment below. I want to talk a little bit about some of your opinions with raising money versus bootstrapping. What motivated you to raise the funds? And what do you think about the differences between those?
Right. So if only you can always bootstrap. The moment you start fundraising, you buy yourself a boss. And the reason you started this company in the first place is because you didn't want to have a boss. And so fundraising is scary, honestly, because you're selling your company, and at some point you'll lose control of your company. And I've heard so many terrifying stories. So again, always make sure that you have the right investors that are your partners. their incentives, like in theory, they're aligned, but not necessarily. Like not always. So again, they're there to make money, and so just keep that in mind. So if you can bootstrap, there is plenty of ways to bootstrap, and one of them, depending on what type of industry are you in, there is plenty of like equity-free grants. There is some equity-free accelerators. There is also like SBIR grants for small businesses, the DoDs basically sponsoring R&D for your company. So it's like a more technology, like more IT related stuff. Then you can try that. There's plenty of ways to do this, and just bootstrap as long as you can, honestly. And because what it means is the money will be cheaper later. Because if you've managed to generate a lot of value and de-risk your company when bootstrapping, then the moment you go to your investors, they like you already have a much higher valuation, right? So the money you will take will be cheaper. So that's something to think about. Like as long as you can, just bootstrap. If you can't, because sometimes there is like say hardware companies, bootstrapping hardware companies is really hard. You can do it again with the DoD grants and stuff like this, but if you think about it, there is huge upfront investment to develop technology. Sometimes also like very deep tech startups, like database companies, for example, right? Like they need to spend 2 years and hire 10 high, like top engineers to basically create a database that is good enough to go to market with. And for that, you have to have a lot of money to invest up front. And so sometimes you just can't do it, or it's really hard and maybe not worth it. So this is when you think of fundraising. Then the next stage when you actually try to think of fundraising is the moment you can't bootstrap anymore, or if you see your company growing incredibly fast, but the revenue is not coming there yet. So this is when you need more support and more people basically working on your company to support all these things that are going on, but you basically don't have money for that. This is when fundraising makes a lot of sense. So yeah, I'm always like up for bootstrapping, and I do think this is the best way because yeah, I mean, with fundraising you're buying yourself a boss, and that's scary.
Right. Okay, so what are some common questions that investors will ask, and how should you answer them?
Great question, although I don't know if there is a good answer to that question, because I don't know if there is common questions. It may be common for your company when you get out there, and you will start noticing that people start asking very similar questions because maybe your story didn't cover everything that it should cover. So you suddenly realize that people start asking the same questions, having the same concerns. Say like they'll say, "Oh, I'm not sure how like your distribution model or whatever." Like like you will see certain patterns that will start showing up, and that's a very good exercise. Again, like to my previous point on going out there for the first 20 interviews, just kind of like learn how to pitch it and how to iterate on your deck. That type of exercise will actually help you understand what are the most common questions you will get, and you can get ahead of it and just kind of add it to your story, add it to your deck, so that so that people don't have this concern. So what happens like in people's brain, like if there is a concern that arose at the very beginning of your pitch, people keep this in their head the entire time they listen to your pitch. So you want to get ahead of any type of situations when they can't focus on actually what you're talking about. They want to make sure, like you want to make sure that they actually you have their attention at all times, right? So it's good to understand what type of things are very obvious that you're missing in your story, and what type of concerns people have. And I always, like, at the end of this, like at the end of this calls that I have with investors at the early stages, at least, I always ask, so, like, because I came there and asked for advice, at the end of the call, I was like, so if you were to invest, what type of questions would you be asking, or what would you like to see, or what would it take for you to commit, right? So assuming that you were to invest, right? Like, so it takes the pressure off them because they are not committing yet to invest anything, but they will tell me like, oh, I want you to see, I want to see more traction, or like, like I want to see some form of like more customer feedback, or I know, like, they will tell you what's missing, right? And this is when you know actually what else do you need to work on your company to be ready for the fundraise. And one thing to think about, have enough conversations with different investors so that you can start seeing trends in their feedback. Don't take every single feedback and just like put it in your deck, because you'll end up like rebuilding this deck 10 times, because everyone has different idea for this deck. Yeah. And everyone will always, and if you ask them for feedback, they try to always find something so that you can improve on, right? So just make sure that like you're not getting crazy, and you're not stuck in a feedback loop where you're just constantly trying to improve, but everyone keeps giving you some other, and very often conflicting feedback. Right. You'll also do that, right? So you also have to use your judgment, but what you want to make sure is just look for trends and patterns in their feedback, and that will be the most valuable.
Okay. So that was a great question that you should ask them, and you dropped a few of those. Are there any other questions that you should ask them?
Right. So yes, actually, there is. You first want to know what's their average check size, so that you have an idea of what you can expect from them. What's their process? So how do they actually make decisions? Some of them will take 2 months. Some of them will make decisions in a week. They have very different processes, and sometimes it involves speaking to partners and then speaking to 20 other friends that they have in their network, and before they're ready to make a decision. So the process can vary, and that will also be very, very interesting and informative for you. The moment you actually start generating this FOMO, you have to move them faster than they would expect, right? So they have to be ready to move faster in the whole process with you, because otherwise they can miss out. So that's something to think about. So the process, the average check size, what would it take for you to commit? That's a good one. Then I would also ask, why are you the right person to, like, how can you help me accelerate this business? So make them sell to you, like, what can they actually offer? Because again, you don't want to take the dumb money. I mean, you'll always end up taking some dumb money, but try, like, most of your round should be actually from someone who can really help you in your business. Someone who has the right connections, someone who can help you. Like, they may have the right expertise. They may be extremely technical and will help you with, like, all the technical hurdles that you'll have along the way. Or they may be very good at go-to-market, or maybe their expertise is in something that you're missing on your team, and they can easily help you at the early stages, figuring stuff out, and then maybe also hiring people, right? So they may be a great resource for hiring, and usually they are, because they invest in so many companies. They know who is now, like, they get to know a lot along this whole journey. So they get to meet a lot of people, and how well networked they are, again, in the later stage VCs as well. So how are they going to help you with the next fundraise? Mm-hmm. Also, what is important? What's the stage of their fund? So can they do the follow-on investment later, or they're closing their fund and there won't be more money?
Gotcha. Those are fantastic, and I know we're getting kind of close to. We've been on with you for almost an hour. Thank you so much. what are some other things that we should know? If anyone has questions, now is definitely your chance. Make sure you drop those into the comments.
What are the other questions you should know? Things you should know? I am not sure, honestly. Like, is there? If anyone has any other questions, I'm happy to answer them. But there is nothing from the top of my head that actually comes up immediately. I think we've covered pretty much a lot of the whole thing. So,
well, I really appreciate your time. We didn't talk about the accelerator that you participated in, but I'm in the process of applying for accelerators now. Is there anything, for that? Just, I know it's a completely different topic, but
it's actually a very similar topic if you think about it. So, so it's actually a very good question. So the way how we went about applications. So the first thing we did when we started the company, we tried to apply to YC, and that was the only application we've sent, and we hoped we'll get there. Again, not a strategy. So after we got rejected, like the first interview, like we got rejected. So what we did the next time around, I've created a list of accelerators that we are a fit, and some of them were more exciting than the others, and some of them we would probably, even if we got into, we would say no. But it's a good practice to just go through the interview process, so it's still worth applying.
Yeah.
And the thing I've done, which I think really helped us, was I've identified all the companies that went through the same accelerator I wanted to apply to. Okay. I reached out to the founders, to the CEOs, and I asked them, hey, can you give me feedback on my application?
Nice.
You know, like the MDs that run the program, they know them personally. They know them very well because they just because they went through this program. So they will know what these people look for in the application. And so they will help you phrase certain things. They'll help you. They'll spot all the things that are missing in your application. They'll help you, formulate the problem statement better. So it turns out it's actually not easy to come up with a good problem statement. Even if you think you know what the problem is that you're solving, coming up with the way on actually how to, frame it in a way that the grammar can understand or whatever. Like, it's really hard. So getting more feedback on this, you'll keep iterating. And I've reached out, oh my God, like, I won't lie, if there was like 100 people helping me with my application. And the moment I actually nailed the application, it turns out that the application is very similar to most of accelerators. Like 90% of the application, the questions are pretty much the same. You need to iterate slightly. Then there is this 10% that is remaining. And we nailed our application to the point where no matter, like, we got invited to the first round of interviews to every single accelerator. And then what happens is, like, you get to the first round and you will find out that the questions they ask are pretty similar, and like the things that they expect are pretty similar, and so you'll learn from this again. Mm-hmm. And so what we've noticed is, like, the first time we got rejected pretty much right away. The second time we got to the second round of interviews. Then there was the third round of interviews. And then we got down selected to the top 40 companies for Techstars in London, top 20 for Tel Aviv. And then we ended up getting selected to the Techstars in Boston. So it was a process, but it was, again, there was a strategy around it. It wasn't just, and then the other interesting thing is when you speak to the founders that went through the programs that they're applying to, you get some insider knowledge. So we've heard that one of the guys we were speaking with, he's a huge fan of Formula One, and we started comparing our database to Formula One driver. And he was just started laughing. How did you know? Right? So you just build this kind of thing, like, because what we found is, after speaking to the MD that finally ended up choosing us to this program, he said that one of the things is the very first part, when actually most people fail, is the very first interview. So obviously application has to be strong so that you're selected to the first interview. So it's worth really learning from other people, how did they do it. But then you start going through the interviews, and what they care about is, do I want to actually spend the next 3 months with this person in one room?
Yeah.
are they nice people? Is this a nice team? Like, do I like them? Right. So of course, like everyone tell you, be yourself, be likable. But if you can, like game it, like, like what can I know? Like, what can I, right? Like, I mean, just do everything you can, right?
Right. I get it. Makes total sense for sure. That's a good little trick. Yeah, and I think that no one should feel bad about that necessarily, because it's first impressions. It's a high pressure situation, and you want to be able to kind of like shave off that awkwardness so that you guys can just start connecting and seeing like, hey, look, are we going to be good together or not? For sure.
Yeah. And I mean, like, it's life, right? Like, it's not nothing personal, because there is like so many people in the world. Like, if these two don't like you, it doesn't mean that you're not likable, right? Like, it's nothing personal, because like, like, it's just that there is no chemistry between the two of you, right? Like, that's it, and that's fine too. Like, so don't take it personally ever, and just like, again, like, we got so many rejections before we got to the accelerator in Boston. It's totally fine. You just keep learning. That's the learning process, and you have to get used to getting rejected as an entrepreneur. Like, this is going to happen every day of your life for the next 10 years. So so it's just something to like to kind of accept. And it's like, okay, not everyone likes me, not everyone likes my company, not everyone cares, and like, that's fine. That's life.
Yeah.
So.
We just put one question come in the chat. What if the fund is given and the business fails?
So the VCs, how they work, they basically understand that 95% of the companies they invested in will fail. So they make money out of the top 5, maybe top 10.
Mm-hmm.
Most of the companies don't make money, and so this is the assumption that they're making bets, and they're huge bets with potentially huge returns. So if they found the next unicorn, this one unicorn will make them money for the rest of their life, right? So it's literally just a numbers game for them, and so they try to make informed decisions based on the team. How like, if the team is is a good fit for the market, like for the problem you're trying to solve, if like they had an experience in the industry, and like all this type of like, they try to de-risk as much as possible. Obviously, they're not stupid people, so they want to make good decisions, but they also know that most of the companies won't make the money. So so it's okay to fail. It's not great, and your job is to make sure that you're actually not failing and you're making this money for the investor. But life happens, and not every business is going to succeed, and the stats are against the odds are against us, right? So have that in mind. And again, it's as long as you're doing whatever you can to succeed. Sometimes it's just not your fault. Sometimes it's just not the right timing for the market. Mm-hmm. There's like plenty of external reasons that like the reasons why your company may fail, and that's life. That's not great, but that's life, right?
It is. Well, thank you so much for taking so much time this morning to chat and share knowledge. Wishing you the best of success with SliceUp, and I hope you'll keep in touch with what you guys succeed at doing. And yeah, just good luck with everything. Thank you so much.
Likewise. Thank you so much for the invitation. It was great. I appreciate this.
Okay, we'll talk to you soon. Have a good rest of your day.
Take care. Bye-bye.